Hi, in this video, the two stocks that I'm going to compare is HEIN and CALSBERG. Both stocks are listed in Bursa Malaysia, which is Malaysia market. As usual, we're going to break down into 5 parts and compare which stocks is a better choice to own now. Before that, let's just see the business overview. Both HEIN and CALSBERG produce, package, markets and distribute alcohol beverage in Malaysia and the rest of Asia. First of all, the financial health. In this part, we can clearly see that the HEIN has a better financial position as compared to CALSBERG. This is because the short-term asset exceeds its short-term liability, the debt-to-equity ratio is much lower, and the interest coverage is slightly higher, and the debt-to-equity ratio, although it has been increased, but it increased at a smaller margin as compared to CALSBERG. Therefore, if you want to choose a company with better financial position, HEIN will be a better choice. And next, it will be the past performance. HEIN current net profit margin is 9.5%, which is slightly higher than CALSBERG current net profit margin. However, the earnings for HEIN has declined 5.4% per year over the past 5 years. As compared to CALSBERG, the earning has declined only 0.8%. CALSBERG also has a greater return on asset. Therefore, in my opinion, I would think it's a draw in this section. And the next section will be dividend. HEIN has much attractive dividend yield as compared to CALSBERG. Both companies has growing dividend, which is good for the past 10 years. However, HEIN payout ratio is a bit too high. CALSBERG payout ratio is also high. I would normally prefer a company with lower payout ratio. This is because high payout ratio may not be sustainable. If the company couldn't continue to have better earnings for the next few years, better profit for the next few years, it's very likely it won't be able to increase their dividend payment if the payout ratio is too high. The fourth part will be the valuation. Both company price to earning ratio is high as compared to Malaysia beverage industry average. The price to book of CALSBERG is also higher than HEIN. However, the market cap to free cash flow for CALSBERG is lower than HEIN. As for me, in terms of valuation, I would like to look at the market cap to free cash flow. This is because when we're buying into a stocks, we are buying into a business, and business, what we want the business to do is generate more cash flow. Therefore, I would prefer to look at market cap to free cash flow in this situation, which means CALSBERG is a slight win in this situation. And lastly will be the fair value. The analyst expected growth for HEIN is around 18%. Therefore, to be conservative, my assumption for the growth rate for the first to the 5th years is around 15%, and for the 6th to the 10th year is 10%. With all the assumption above, the fair value of the stock is around 17.68 ringgit. The current stock price is around 22.54. This indicates that the stock is overvalued based on all the assumptions above. However, if you think that the growth rate for the stocks will be higher for the next few years, it may still be a fair value stocks for you. As for CALSBERG, the analyst expected growth rate is also around 18%. So to be conservative and to compare, I place all the assumptions same as HEIN. And therefore, the fair value is around 18.38 ringgit. The current stock price is around 22.54. This shows that it is overvalued as well. However, if you think that the growth rate for the next 10 years will be higher and the multiple you could sell will be higher, then it may still be a fair value for you. However, as for me, I will prefer the stock to drop below the fair value before I jump into the stocks. And so that's it for the video. I see you guys in the next video.